Yo guys, here we are again. So, here is a quick one for you guys. Like I told you, I said when this market is ready for for the continuation back to the upside, that I'm going to come back and give you the update on how it's going to go. So, before I proceed in this very video, if you have not subscribed to this channel, please do well to subscribe so that when I upload video like this, when I give this type of signal, you get to see it on time. Click the subscribe button and turn on the notification bell. Alright, so it's important you turn it on. Make sure you turn it on, guys. So if this is your first time, do well to subscribe. And if this is not your first time, please click the like button and make sure that you share this video so that people who don't have access to this video yet can always come across this very video and subscribe so that they can end up as also benefiting from what you are benefiting from. So here is a quick one. We all remember I said earlier before now how this trade is going and how this trade is going. I made it clear to us how this trade. Hold on, please. I'm sorry about this. I made it clear to us about how this trade is going and how I'm going to let you know what the situation would be like. We all remember that I said that when this market took off from here, it was coming to 2770, right? 2770. That's where we projected that the market was going to get to. So, and again, the market went ahead to give a fake out. All right. After giving a fake out, we also projected that the market was coming back to retest this level. So, having returned to this level, we said this place is going to be the takeoff point, isn't it? So all we just needed to do was to see, you see, for those of us, for people who like trading trend line break, everybody would have thought that this market was, because it broke this trend line to the downside, that the continuation was, the market was going to continue to the downside. The market doesn't work like that. Let me tell you the usefulness of this trend line. This trend line is just to let you know, as the name implies, trend line. Okay? Trend line. This is a line. Okay? Then this is the trend, an uptrend. This is the trend, an uptrend. This guy does not have any power to tell you whether the trend has changed or not. This trend line does not have the power, the capacity, the tenacity to tell you whether the trend has changed or not. So you need to have that at the back of your mind. So trend line does not tell you whether the trend has changed or not. What simply tells you whether the trend has changed or not is when the major resistance or the major support breaks. It is clear. Trend line is a tool to be used as a technical analyst. Okay, as a forex technical analyst, it's important that trend line is your tool that you should make use of every now and then. Okay, it's important that you make use of your trend line. It's very, very important, but it's not a criteria for you to determine whether the trend has changed or not, because a candle simply broke the trend line. It has broken it on several occasions, whereby the market continued back to the direction. Now, here is it. This is the message I'm bringing to you right now. We remembered earlier, we said the market was coming here, and it did just that. As we said, the market did just that. After getting here, we said, okay, we expect the market to come back to this point. How did we know that the market was going to come back to this point? What we did was just we drew Fibonacci all the way from this is a low, then to this high. This is a low, this is a high. Remember, we said we wanted the market to come all the way to this 2770 earlier on. Let me put a trend line there. Let me put a trend line there. Okay, 2770. That's where we actually projected the market to get to. Okay, now let's leave it there. Let's just leave it there. 2770. Okay, I just want it to be accurate. Okay, okay. I guess let me just use what is it called? Coordinate. Okay, style. Okay, coordinate. Sorry. 2770 was the target. Okay, having done that, look at this thing very critically. Now, this is our 50%, 61.8% level, right? Let me make it bold. We have said it earlier on that the market was coming all the way to Fibonacci level. So if you put this Fibonacci here, if you put this Fibonacci on this is where we said the market was coming to, right? Earlier on. But he came ahead to do this fake out. Everybody would have thought, continuation to the upside, continuation to the upside. But we that knew what we were doing, we said we are going to be getting out of the market at 2770. We got there, we came out. When it continued to the upside, we knew that the market was just faking. We knew it was just faking. So at the end of the day, the market ended up sweeping to the downside. I made a sell entry from here, from somewhere here. This was where, if you check my previous video, you will know where I made my sell entry. So the sell entry was here. I made my sell entry here. This was where I made the sell entry, somewhere here. Yes, I made the sell entry from somewhere here. It took days. This market actually took days before it poured down like this. It took days. I'm never gonna lie to you. I was like, this does not want to go down again. I began to think, does not want to go down again or what? But I knew that what I've done is actually cool and it's good. So that's why I just had to hold the trade. I usually say that whenever you're trading against the trend, it's important that you lower your risk. If you are using 0.5 lots before, it's important, or let me use 0.1 lot size before, you can reduce it by 50%. Okay, reduce it by 50%. It's important that you reduce it by 50% because when you are trading against the trend, the market does not usually move smoothly. It ranges a lot when trading against the trend. It ranges a whole lot. Yes, I'm never gonna lie to you about that. So it's important. So it's based on my experience. That's what I've known. That is what I have discovered in the market. It ranges when it's trading against the trend. So it took days here. It was Donald Trump win that led to this spike to the downside. Yes, because dollar actually gained high value that very day. It gained strength. So that's what made this speed was so much on that very day. So when it got to this Fibonacci level, this 50%, right? Then 61.8%. When it got here, broke down right by daily candle. I knew this one again was just. So what did I do? I had to calm down. I had to calm down, guys. That's why it's important when you know what you're doing. The tendency of not entering trade on impulse, it would be killed. Would be killed. The tendency of not entering trade based on impulse when you know what you're doing. In fact, that was wrong. It will be there. Yes, you will always save yourself. That's why I said that it's important to understand technical analysis, because technical analysis, what it does is that it helps you to put stop loss where stop loss is supposed to be, take profit where take profit is supposed to be. It helps you to take trade when you're supposed to take trade and save you of bad trades. That's what technical analysis does. It helps you, it saves you of bad trades. Technical analysis saves you of bad trades. Yes, it tells you not to take bad trades. That's one of the key importance. It's important you understand it. Forget all this scalping or whatever enter trade because you see one candle blue, blue there or green. As a result of that, you too want to enter green. No, it doesn't work. It doesn't work like that. Know the bigger picture of the market. When you know the bigger picture, then your stress, the stress of trading is reduced by 50%. Then when you now know your strategy, you now know your entry pattern, your setup pattern, then it is reduced again by another 30%. So when you now know your entry pattern and exit pattern, then your solution is set, your problem is settled. Then your problem is settled. It's important you know your entry and exit pattern. It's important. Technical analysis will help you to do all that. Or you can determine, in fact, you can always determine that yourself. Technical analysis will be the one to tell you where to enter and where to get out, where to put your stop loss and where to get out of the market. That is a function of technical analysis. So right now, guys, if you have not subscribed to this channel, do well to subscribe because I am giving you this signal for free. I promised you that when the market is ready to start heading up, I will come back here and tell you when to enter and what to do. So right now, yesterday, I saw this market. It came down a few days ago. I saw the market came down here. So this was yesterday's candle that actually went up. This was a day before yesterday, a day before. So this was yesterday's candle. So this market came all the way here. After coming here, okay, I even expected a longer stay in this area, but because of Donald Trump win, that's what brought down the market so fast. Then eventually that same speed again. So the market had to reset to start heading back towards the direction. Okay, fine. This trend line is broken, right? So let's watch and see. See, some people will tell you trend line is broken, therefore to come and retest, they start heading back. I'm not saying it might not head back to the downside, okay? But majorly speaking, this trend is still an uptrend. Before it does any other thing, it has to come back and make this 100% movement first before any other thing happens. So now looking at it all the way from here, from this place to where we saw this market, where this market has started moving from, up to this first 100% level is about 1,300 pips. 1,300 pips. So that's a whole lot. So now what we are going to be doing as traders, as retail traders, is to maximize these opportunities, this number of pips that the market is given. Our own is to maximize it, to make sure that we make efficient use of it. We can't grab everything. That's one thing. That's one of the ways you need to be seeing yourself as a trader. You can't grab everything. So the market is making 1,300 pips, right? So now it is pertinent of you to know, to be able to make use of your skill or of your analysis to take as much as possible, but know it for sure that you can't have everything. Okay, as a retail trader, you can't have everything. There is no doubt that some people were already into this trade or are already into this trade all the way from here, then their stop losses are here. But you as a retail trader, can you enter trade here and come and put your stop loss here? The answer is a no, because you might not really have that kind of account size to be able to secure this type of stop loss point or risk. So it's important that you get to know where to enter. You can't chop everything. You can't eat everything, okay? You cannot eat everything. So you just have to take as little as possible until the market make this first 100% level, then before you make the otherwise decision. So now let's now delve into it. This is what happened. Why did I start looking for a buy entry? Because this guy had a change of trend here. Okay? This is 1-2, right? A change of trend. Then eventually the market went, then it came back down. If you draw your Fibonacci from here, you will see that the market pulled back to a 50% Fibonacci level. Okay, so this is, yes, you see that the market had pulled back down into 50% Fibonacci level. Okay, there's no doubt about that. There is no doubt that this market can still stay longer here. Okay, and there is also no doubt that this market can still push to the downside, but I am 80% favoring the upside. I am 50%, 80% favoring the upside. So it's important you know what you're doing. So according to Mark Douglas, one of the greatest traders, where in one of the in one of his books, he said that you don't have to think too much. When you see your trade, your pattern, make your entry. You don't have to think too much. When you see your pattern, make your entry. It's not your I've said it before. It's not your strategy that moves the market. There are big time market movers as far as this business is concerned. You get what I'm saying? There are big time market movers. So it's not your strategy that moves the market. So here is it now. You don't have to think too much. Once you see your pattern, make your entries. Put your TP, put your SL, and get out. Okay? You don't have to even think too much about it. Don't think. Stop thinking. Will you be wrong? Will you be right? Am I wrong? Am I right? No, you don't have to think too much about it, because the market would always be right. The only person that could be wrong or right, it's you. The market would always be right. So we are doing our possible best to make sure that we think along as the big time traders or the market movers are thinking. We think along with them. That's our responsibility, by simply looking at the candlestick pattern, by simply looking at the market, the chart movement, price action. That's what we are doing here. So there is no doubt that this market might still take time a bit here before it eventually takes off or push back down. But as far as this setup is concerned, buy is already triggered. Buy trade, it's already triggered. So today is Friday. There's no doubt about that. Today is Friday. Buy trade is already triggered as far as this trade is concerned. Buy trade is triggered. So I'm already in this trade. Yes, I'm already in this trade. So this is where I took this trade. Yes, I took this trade somewhere here. After this consolidation, I made my entry somewhere here. So this is where I entered this trade, right? So this is where I took this trade. So I'm already in this trade. Whatever happens, I'm already in this trade somewhere here. Yeah, I'm already in this trade somewhere here. And my stop loss is around, I guess it's around this place. My stop loss is around this place. So I took my entry there. My entry is here. My stop loss is somewhere here. And my first TP is here. Let me take out this. My first TP is here. Then last TP is here. Okay, first TP is here, because if the market truly is going up, then it will first of all hit here before coming up to this place. So it's already it's a win-win game. All right, it's a win-win game. So whatever happens, as far as this market is concerned, I'm not going to be moved, not going to be shaken. I've made my entries. So as the market continues to move, we'll continue to take more entry. As it moves, we take more entry. Move, pull back, entry. Move, pull back, entry. Move, pull back, entry. So that's what we'll keep doing until this 100% is achieved. So if the market decides to come all the way to this 2,900, then we'll continue to follow it to 2,900. So if this is your first time of watching my video, please do well to subscribe. Okay, long-term trading, like I said last time, that if you really want to be a winner in forex, you need to be a long-term trader. Yes, see yourself as a trader who thinks from a bigger perspective. You're not just a crumb taker. All right, you're not just a crumb taker. So see yourself who is the master of the game. You think from the bigger flow. Know the flow of the river, know where the river is flowing to, and know where the river is flowing from. So as far as this market is concerned, it's still very bullish. Looking at this monthly time frame, right? It's still very bullish. Still very, very bullish. So no matter what happens, the market is still very bullish. Okay, it has not done anything otherwise yet. So now if this market Before anything happens, it has to come back and test this place first. Okay, maybe the market wants to have a change to the downside. I don't know, but I don't. Based on what the market is saying now, based on this chart pattern, it has to come back and test here first. Okay, then from here to this place is about 1,300 pips. So all my trade, this thing had already been mapped out. Okay, everything had been mapped out already. So from here to this place is about 1,300 pips. So make sure you catch as much as possible. Have it in mind that you can't catch everything. Okay, you can't catch everything. What did I say? You can't catch everything. So just stay at alert. Make sure you subscribe, because as time goes on, as this trade moves to the upside, make the 1,300 pips, I will be releasing short videos on how I'll be making other entries. Okay, I'll be releasing video on how I'll be making other entries while I'm closing some, where I'll be closing them, where I will be. So you tend to make the entries with me when you see my trade, my video on time, so you'll be able to follow as I have said it. So thank you very much for watching. Do well to share, do well to comment, do well to encourage me with your comments. If I am giving you the value you actually need, if I am actually giving you value, do well to comment and say something in the comment section. Like the video, don't just watch and pass. Okay, make sure you watch the video till the end. Just stay focused. Jumping from strategy to strategy does not really help. I'm not even gonna lie to you. I've told you before that if you really want to grow as a trader, make sure you pay attention to the charts. Then have that mentor, have that trader who think the way you think. That very trader who thinks the way you think and who does things the way you do things. Okay, so as you subscribe to that person, you tend to start reasoning along, you tend to start communicating, you understand, in chat and in your entry, in your exit, you start communicating in everything. So jumping from one strategy to another, pay attention to your charts. It's important. Pay attention to your charts, guys. There is no holy grail strategy out there. There is no holy grail strategy out there. It's all about knowing what you know best and following it through. That's what makes you a good trader. The bigger guys, Shibi, I am actually okay. Look at it now. I am already thinking of this move all the way from here to this place. It's not going to happen in one day. It's not going to happen in 2 days. It's going to take days, sometimes a week. It's going to take days, sometimes a week. So looking at this very trade now, there are some people that will just make entry today. With this move that had happened already from here, all the way from here to this place, some people had made thousands of dollars. So know your risk. That's another thing. Know your risk. Know what you are risking. Know your account size. When you know your account size, you will not be greedy with it. Because this market is not about who first come, or it's not about who comes first. It's about who is able to stay longer and stock in profit. Who is able to stay longer and stock in profit. Some people will come today, make 3,000. It has happened to me before. Make thousands of dollars, and that same day, that same week, I end up giving back the thousands of dollars to the market. So until I learn to start sitting on my hands, that is not all the time you trade. It's not all the time there is opportunity in the market. So I found out what suits my psychology. I found out what suits my trading style. Then I started following it. I told myself, I said, in fact, it's enough. Enough is enough of all the losses. Enough is enough. I told myself that. So I had to stay through to it. I had to stay through to it. So when I place my stop loss, if the market comes to hit it, let it come and hit it. Earlier yesterday, when the market started going up, this market, I expected it to come back to this place, but it didn't. So when I saw it break out, I entered the trade. So when I entered the trade, my stop loss was somewhere, my TP was up, and I actually wanted to enter 2 positions, but I said, based on how the market is doing, I don't know whether it's actually ready to go. I have to reduce my risk first, my lot size. I had to reduce it. So my stop loss was somewhere here. I didn't readjust it because the market can break out from here and at the end of the day continue back to the downside. I said no, I had to keep the stop loss like that. So the market came, it hit me out on stop loss this morning on this the trade I entered yesterday. So today is Friday, Thursday. I entered on Thursday somewhere here. The market was going, but before I woke up this morning, I saw it coming down. So eventually, when I saw it coming down, I didn't do anything. My stop loss was still there. Then my mind was telling me to readjust it, that the market will still continue up. I knew it will still go, but you can't tell. I'm not the owner of the market. You can't tell. I knew it's still going up. I knew, right? At least because I knew that the market will still go up. So I was supposed to move my stop loss maybe to somewhere here. But that would have been too much of me. That would have been too much for the account size. So I had to leave it where it is. I was comfortable with this stop loss. So if the market decides to still come here, so that means it's not ready to go yet. So eventually, if it's set up here and I make my entry from here to this place, what I lost here will be recovered and the actual target will eventually be gotten. So it's a win-win game. Just look at this logic. The markets knocked me out. Eventually, okay, what if as it got here, it continued down? What if as the market got here, then it continued to the downside, and my stop loss is somewhere here? So I will have more losses to accrue. I will have more losses to incur. More losses to incur. So at the end of the day, the market came, it hit me out on negative. Then I had to calm down. When I saw another entry somewhere here, I made another entry. So from here to this place, guys, is going to be giving me back what I lost here, and the actual target amount will still be achieved. Simple. The actual target amount will still be achieved, which is here. That very amount will still be achieved, and even more, because I have now entered at lower price. So this is how the market works, guys. It's as simple. It's so simple. It's so simple. When you understand, you tend to trade with less stress, with less anxiety. Technical analysis is just the way to go. There's no two way about it. It's just the way to go. Fundamentals to me, like my one of my mentors said, Dr. Willis. In fact, he's even my mentor. There's no other person I actually watch. I only watch other people on their lifestyles, the lifestyles they are living. So my focus as a trader and as someone who wants to learn and grow, my focus is on Dr. Willis. That is my mentor. That is who I watch. That is who I listen to. Although for a very long time now I haven't listened to him because I needed to inculcate what I have learned. I needed to put in to digest everything I have learned, practice it myself, analyze myself, then let my analysis work out, play out. And not just playing out, let me make money out of the analysis. So I needed to give myself space. Stop listening to him. I needed to stay focused because sometimes I discovered that his analysis was sometimes clashing with mine. Why? Because there is a view that he has of the market that I do not have of the market. So at the end of the day, I make sure that I stick to what I have known, to what I have analyzed, and I make sure I see it through. And it has been working out for me. That's how the forex market works. If this is your first time, please subscribe. Just subscribe. And thank you for watching this video till the end. So like I said, make sure you activate the notification bell, okay? So that when I upload any other video as to when to enter, you get to see it on time. All right? I don't just upload video. I upload video when there are opportunities or when I have something to tell you guys. So let's allow this community to grow. Let's subscribe, share this video, let other people subscribe to this channel so that YouTube will continue to recommend the video to many other people. I will continue to grow as a community. Thank you very much. And do have a beautiful day. Today is Friday, so I'm leaving my trade. I'm leaving it. I'm not closing it. Leaving it. It's a long-term trade, guys. You can enter trade anytime as far as you know you are a long term trader. Enter your trade, put your SL and put your TP.